The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1. A little technical difficulty, also getting a reverberation. Should tell my engineer. Yes, let's go. So we're looking at the Dow up 136 at 24,523. The all-time high is 24,534, and today we've gone to 24,531. 3 points away, 4 points, let's say, from an all-time high. And what's really important is that we were looking at a U-type formation right here yesterday. And today we furthered that U-shaped formation by trying to double top. The MACD is good, the stochastic is okay. It's not great. It's at 80%, but the price is the price. And the on-balance, the volume is streaming in leg A, B, C, D. Then a leg D up. And now what we're looking at is the weekly chart is about to extend leg E, and this is very important, sorry, leg D and a leg E in the monthly chart. Let's go to the S&P. I'll give the parameters. The support now. The Dow is very strong at the 24,420 to 24,380 level. If there's any sudden severe decline, but so far this is very good action. One-handed, typing away here. New all-time high in the S&P, leg E to the upside, extending the weekly chart and the monthly chart. At this point, it's above the resistance level, and that's really very important. And what we're looking at is we've got 26.53 would be pretty good support if there was a sudden turn down. Let me just type it in right here. E. Got it? Okay. Now, I want to do this. So one of the things that we're looking at is what is happening with the QQQ. The 3 Qs, that is the NDX 100 power shares trading vehicle, is under the previous high, 156.69, having a very strong move to the upside. Without the technicals, they are improving, but they're not really strong. So that's just 2 things, and it's outlined it right away. Within the context of patterns, you've broken above the arch formation. That is out. You've got the cup formation or the V-shaped formation. And that says that in the QQ series, there is a chance now, if we go to the previous high of 156.69 and then punch right through it, not only do you make a leg D in the weekly chart, but the daily chart, if you're going to wait for the stochastic to punch over 80%, it's 59% right now, and for the MACD to cross positive, it isn't positive yet. That says if it does that quite strongly, you've got a bank move to the upside. So I'm going to go just one step at a time, and I'm going to say this is really good action in the Q series. Just quickly, I want to look at Apple. You've got Apple. Apple's just stalled. It's down 60 cents. Wow, the season for Apple is not really doing very much at 172, way below the, not way, but it's really quite a bit below the 76.24 all-time. And now what you've got is, in the context of all these things, IWM, which was a lagging indicator, became a leading indicator, and now it's lagging up 90 cents above 150. This is really fascinating. My contention here is that probably what we're looking at is because there are 5 financials in the Dow, that really is giving the benefit of the start to the Dow. I said a long time ago, one of the reasons why we wanted to keep our core small position long, way down from the 2002 90s, to keep that position and only have short-term trading positions if you're going short, even long, is that the Dow is the favorite. How Bitcoin is going to take money away from the general market is going to be a question coming 2018. I'll talk about that as we move along. But right now, what's really important is that within the context of the different markets, you see the IBB, which is the biotechs, which very often, just see if I can get that right now, IBB, it is, yeah, it's a decent day today, but it made a peak in the daily chart. Big chart just looks okay. And the semiconductors, which are led all the way up and down throughout the year, it's down 64 cents at 97.96. This is a very select market, becoming more and more selective as we move along. Let's go to gold. GC gold right now was down before. Yep, it's still down 7 at 12.40. I told you yesterday, there could be a little bounce, but then weekly chart just broke keys, got like a 1 to the downside, really targeting the 12.22 area. And the monthly chart is improving because this dollar, which is still remain long from the very day of the 70-week low, is doing quite nicely now. It's at 94.80. To tell you the truth, I don't think it's a big deal until the dollar breaks into the 96s. If it does that sometime before middle of January, I think that's going to be telling us a lot about currencies and gold, etc. So in the meantime, it's very nice action, not great action. A couple of things that I wanted to look at was the silver. It's continuous contract. Yeah, it's not down quite sharply as gold, but it's not looking very good. It's at 15.68, down 10 cents. I had a couple of questions. Let's get to the high-grade copper. High-grade copper had a nice bounce the last few days. It's got a little dirty candle sort of stalling at 0.01. We're going to be watching this because, this candle, this sharp down candle, you really negate all the negativity in a candle like that. You've got to start closing above 3.11. Otherwise, it's just going to be trapped in that one line. I was asked about platinum and uranium. I don't know if I can get platinum. Too low, not so good. The uranium, someone just shoot me a chart, TF or ETM on uranium, and I'll be able to get that. Now, what I wanted to show you was the dollar, the bonds. I'm going to talk a little bit about bonds. TLT is pulling back, is down 61 after peak, deep in the chapter. That's where you've got to be careful. 125.80 down 61 cents. This is something we have to watch. I'm not going to be able to go to it if I can put one hand. Here we go. The FVX, I'm going to spend some time on this over the next week or so talking about, has gone to a leg at a new recovery high. Weekly chart is in leg C. Monthly chart is in leg C. This is the 5-year yield. So if you're looking at context, the TNX 10 yield right now is also moving quite nicely. It hasn't broken out the high that was made on the 24.37, but it is at 24.16. So it's working its way higher. I think what the Fed does tomorrow is going to be really, very interesting. And the Dow is up 157, S&P is up 9. There's an anticipation here, and I think that the XLF, that really is key. The XLF is making a to a new recovery high at 28.21. It's moved above the doji candle of last three. We'll talk about that. Rate coming up, how's it happen? Target technicians out on the international telephone and telephone.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. RA up, which is, what is the URA? This is the global X uranium. Let me write that down. I knew I was going to do some work on this the other day, and then I completely forgot. URA. Okay, so URA is trading at 16.03, down 22 cents, just made a leg E. The daily chart is moving very nicely. Now, let me just a couple of little things here. Just want to show you. This is on Friday, we had an all-day session. We were talking about how you can simply put in channel lines. In fact, what I'm going to do is make this channel line solid so that you can see it very clearly. Style, that's an easy one to do. Make this red. Make it a little thicker so that you know exactly what I'm doing. Weight. Okay. And now I'm going to go to the upside and say, all right, well, this is not exact, but this is going to give you a pretty good sense of going from that doji down there right through these candles and to the top. So it goes to the outer point of candles. To me, that's the way I always do it. Everybody has a different way. Doesn't matter. What it says is that you're in an up channel making higher highs and higher lows. The 9-period moving average, the black line at 15.51, is in fact holding very nice, holding support all the way from the gap up session, huge session on the 4th, and then it pulled back, consolidated a little bit, and now it's breaking to a new high. So this is now a leg E. And what's really important about this, yes, at E, other things can happen, but you still have 15.51 support to 15.19. So let's just keep it in mind that it's in a buy mode. It's getting a little bit, I'm not going to say toppy, but it's getting a little bit towards the upper end of the range. The MACD is flattening a little bit, still strong. Stochastic's a little weak at 76%, so we'll watch this closely. But what's really important is that the candle in the weekly chart, this is a brand new leg C. So you go to the lowest, most obvious low, especially after the arch formation, and then the MACD and stochastic gave a nice buy signal because there was a positive divergence. Now you can go peak A, peak B, leg C. And what would I do? I would grab, this is what we practiced the other day, grabbing left side highs, grabbing it and pulling it across and saying, okay, from this level to that level right there, have we got anything that remotely gives you a sense of time and price? So here we go, 1, 2, 3, new parallel. Whoops, didn't mean to open it up so wide. Come back again. Okay, make that green, and then I'll show you exactly what we'd be looking at here as the most conservative approach. And that says that the high that was made on the week of the 17th of March at 16.77, we're in leg C. If you take the left side low and you draw a Chapman wave inside wedge target resistance line, it went right to the line. So this kind of confirms we're looking at the right thing. And it says, yeah, you could stall a little bit here, but the real action will be 1, 2. That within 2 weeks, that's within December's time frame, URA should try to test and maybe even break 16.77. So that's the way I would look at that. And I definitely draw in. This is a funny kind of a cup formation, but it is still a cup formation and going to there. And the monthly chart has got an inverse head and shoulders, and this is actually saying, you know what, at 16.03, as long as it holds key support in the 1510 to 1450 level over the next 2 weeks, preferably breaking into the 16.50s, that's going to be very positive for the monthly chart. Hope that helps you. I can't even remember who asked me in the den. It was asked by Coda. So Coda, yes, looking at that. The next question I had was, would I look at STX? So STX is Seagate technology. Now, you know, Seagate technology, come on. This is a technology from the, I think it had to do with disk drives and all that stuff from way back. It has spectacular run. I'm going to do this monthly chart live. I'll show you. Take the lowest, most obvious low bar, merely count each successively higher peak to a peak D. At peak D, other things can happen. If there's something like a Chapman wave instant restart, put it in. Instant restart is within 3 bars. You break to a new high without breaking down very much below that D. That's exactly what happened here. So I'm taking time to do that. Now there's a brand new move to the upside. And what do we have? We have a buy mode, an instant restart that gives you a brand new buy mode, and you don't know because you usually have alternate wave counts, can take you all the way to D and even an E. Wow, lo and behold, that's exactly what it does. It goes to an E, doji high, all-time high, right there in 2015. Is that May? Let me just double check. Yep, December, there's the line. December of 2014 is 69.40, and then it comes down in the monthly chart. It comes down trough A on the way down. We have lowercase troughs, B, C, D, and then it goes to an E, from which you get the stochastic and MACD turning up. I usually put a plus sign to start with, and this is just like a single leg A to the upside. However, the move that we've just had has an inside A and a B. So the monthly chart is improving. It's not great, but it absolutely is improving. What's the trend line resistance I would do? I'd go right from there. I'd be conservative at first. I'd take the top of that candle inside that wick right there to the high that we're making right now, and then I would move it up to the top of that candle. So right now it says excellent move, excellent rally on the candle for December. December's not even halfway done, so we can only say so far. Go to the weekly chart, STX, doji candle low. We talked about, must have been 35, 40 minutes. We talked about candles, must have been more than that on Friday in the 8-hour session. And we spoke about the importance of certain candles. Look at that candle, doji candle, uncertainty, turns around, you get a leg A, a leg B, a peak B, and we're in a leg C. So far, the MACD is very strong. Stochastic at 90.31, very strong. What do we want to do next? We want to go to the daily. It's funny, I often go daily, weekly, monthly, but a lot of the time, because on the right, you've got fewer peaks on the monthly chart, I'll just grab the monthly and I say, okay, let's start going. Yeah, but wait a minute, this is very interesting. Look at that doji candle, tiny little doji candle low that was made around about the 21st of August, and now it goes peak A, it goes peak B, peak C, peak D. And then do we start a brand new one? Yep, we start a brand new one. And do we? Yes, A, B, C, gap up, spike to D. So we've got 2 buy modes completed. Now let's see where we are. And now we're starting another buy mode with that low right there. and we've got A. See, I'm making it as simple as possible. A, B, and this is leg C. A, B, leg C. So this is very important. Yes, this is really a good move to the upside. Now, what I would do is I would grab trend lines. I'd say, hey, my eye says that those lows are very important. Is this somewhere inside? Yep, I love to use gaps for trend lines. So that trend line there says, okay, let's be as conservative as possible. We're going to push that trend line higher and make it a straight line. There's a lesson we're getting right now, folks. I thought, why not? Good question by one of our Dennis, who has already taken my Master Trader series. Hadn't done it for a long time, getting back into it. So let's make that red. When we get back, I'll have finished a bunch of stuff on this, and we'll talk about it. STX trading at 42.49.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. We're looking at STX. This is Seagate Technology, and it's trading at 42.36, up big. It's up 189. And what I've done is I've drawn in parameters, and now what I'm going to do is just put in the Chapman wave inside. There we go. Let me do this. Chapman wave inside track, repellent zone or sell zone. Sometimes you want to be careful here. So this is going to be, let's make it pink. Let's make it dashed line right there. So this is what I'm thinking. Peak C is about to come in the next day or so, and then there should be a rally towards the 43, maybe the 43 and a quarter level, somewhere just around 43, depends where peak C is made. And that says on a short-term basis, you've got the price, the daily price of SDX, Seagate Technology, getting close to some kind of resistance. The MACD's just crossed positive. That's good. Stochastics at 82%. That's good. On balance volume is good. So there's nothing wrong here. I'm just saying it's getting a little bit toppy, only based on the trend lines that we're looking at. If you look at the weekly chart, now this I've done it a little aggressively. Usually I do it a little bit more. I give it more room. Conservatively. So conservatively, I would have said, I would have liked to have gone out another week or two to think that the high that was made back on the, right there, the week of the 19th of May of 2017 at 44.06. And what I do is I always go to the Grand Canyon wall that I have to bump up against, and that gives you the cup formation, gives you the nice doji right at the bottom here at 30.60, week of the 25th of August. And that would say by next week you should at least be attempting to get into the 43 to 44 area, and it's at 42.29 right now. Okay, my eye says, based on what I would normally do for the Chapman Wave inside wedge, I would go from here and say, you know what, I think it's going to take a little bit longer. It doesn't matter. So far, everything is very good because the weekly technicals are confirming the rally. Good eye. So good eye, yes. I don't know if you're along, but the question was, what about SDX? And now another question that was made, and this is a great question, and this is what we were doing just the other day on Friday. We were looking at the patterns that developed, and I discussed the cup formation, how the market only does three things. It either goes in a straight line, and that's up or down. It makes a cup formation or an arch formation. And the cup could be a V, but it's still a cup formation, and the arch could be an inverted V, but it's still an arch. Just three directions. So here we have. And the question was, I'm just not sure. I can't remember what we had discussed about about cup formations. Well, what we had discussed about cup formations is still relevant today. And that is, if you make a cup formation and the middle is higher than the left side, that suggests that you could go just a tad to that previous high or to the original high on the left side, and then you're probably going to pull back. When you're sloping, you've got to take into account the degree of angle that you're moving higher. You've got to look at the number of bars, and we've made an arch formation, a cup formation that is in a quicker time frame than the original one that was from around about the 22nd of October to about the 15th of November. Here we've got a much quicker one. There you went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, about 24 bars, days. And yeah, you've gone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13. It's still young. And it's only in leg C. So that says that, yes, you should at this point have at least an angle of incline that matches the bottom. And that's why I went a little conservatory. I went to the lows of the candles, the wicks. I think that's my rule of thumb. I want to stick to it. And that says that the resistance will start to come in between this dashed pink trend line. If it's tomorrow, let's just say 49.92. And if it goes above that, then the next level of resistance would be at about 43.45. Then there's a rising price, and I'm just going to make that much lighter in weight because that's just an outside trend line right now. And that takes you to the 44.80 to 45 area. So yes, I like it, and support should be between 42.05 and 41.75, at least in the short term. Hope that helps. A good question, good eye, and hope we've covered the details that you were trying to refresh yourself on. So now let's do this. I had another one. Now I've got a bunch of questions. The XLF, I thought I mentioned the XLF. Yes, the XLF. having a pretty good day, slightly higher after the left side peak D. It's got a 1, 2, 3 bars to the downside, 1, 2, 3 to the upside. So we've done a left side, right side price time match, slightly higher. So what was the question? Bob wants to know. Bank of America, JP Morgan, SCHW, Schwab, yep, wave count. So Bank of America trading at 29.34. We were once in this in the 23s and 24s and 25s. We're back in it, and I like it, even though I said that it should be going to leg D today, and we're kind of a little vulnerable depending on what the Fed does tomorrow. But the way the market is moving, if I can just do this, I'm going to do that. Give me a second. I want to put up this chart. You can't see it. It's on a completely different computer. I want to see how the Dow stocks are doing, because the Dow is up 0.50%. 0.58%, and the S&P is up 0.29. That is a big, oh, there we go. So Boeing is up 7. Let's say it's price weighted. Okay, Boeing's up 7. Goldman Sachs is up 6. Verizon is up 1.23. General Electric up 34. Oh my, J&J is up almost $2. Yeah, this is Verizon. I wanted to get to, oh, no, we're looking at Visa. Yeah, so that's what I was saying. I think it's weighted. I'd said to subscribers, Visa and MasterCard are on my list later for potential put options, but not right now. Look at this. Beautiful action in Visa, up 1.19. MasterCard up 2.31, up at 153. Both of them about to test their all-time highs, 154.85. This had a perfect Chapman wave peak E, 2-bar Chapman wave reversal, 154.85 to 154.47 back on the 28th of November. Plummets. I say plummets because you can see on the weekly chart these stocks haven't had anything of a digestive phase whatsoever. And even here, it's just like 1 month down. Are we going to make a new high in December? And what we've got is huge Lamont type curve in the bend on the racetrack. Look at that 9-period differential green, how it zipped from horribly ugly when it went down 14 points. That's 10%. These haven't had 10% corrections before. And now look at it, almost back again, and it's just about to cross positive in the MACD. That is really incredible. American Express, I don't know what that's doing right now. American Express is up 44 cents at 99.44. It made a peak D, and now it's going to try to test that on the left side. They're all doing the same thing. That's what's helping the Dow at this particular point. 5 of the financials. JP Morgan, as we go to the break, JP Morgan is up $1.17 at 106.79. It's under its peak high. I'll be back. Basil Chapman, I did Anderson's Hour, up 140. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone. While we're I completely forgot to do the euro-dollar currency pair. It's down 0.004. It's at 1.172. It's in a leg A, B, in leg C to the downside. It went to a C, and it might have to be a C minus. I'm just a little concerned. You remember that H pattern that we studied? This is part of the Chapman wave methodology. I have a pattern that we call the dreaded H. Chapter 5, slide 16. Oops, that's not chapter 5. Dreaded H is chapter 17. Yep, chapter 17. Slide 332, I think. So this is the pattern that we're looking at. 1H can beget a larger H formation, but until you start to hold above the previous arch high, and it's not doing that here, that has the weight of whatever is a magnet to the downside, in this case, the 200 period moving average of 1.164. I think that's bearing down. And the MACD is very poor and stochastic in the weekly chart as well as the daily chart. So I think there's more pressure to the downside. And if you look at this has kind of been a benchmark for me, a kind of a leading indicator. I like to look at certain stocks or indices, treat them as leading indicators. Look, leg B to the upside in the yen. This is US dollar, Japanese yen currency pair. I think you will make that V-shaped pattern to test that peak C that was made in the weekly chart the week of the 10th of November at 114.728. We'll see. In the meantime, the stochastic and MACD are very strong. And that's the reason why I say gold is ready for a little bit of a bounce, but I would just treat it as a bounce. It's a tester, I think, to see how much strength you can get in a bounce. If there's like the semiconductors, if there's absolutely no strength at all, that's not a good sign. And not only that, I like to look at different things as either leading indicators or not. And when they come out and then they start to fail, and it's been a leading indicator, money comes out of those, and there's always a kind of a whipsaw effect through the different indices until that money finds its way out and then finds a home in others. It migrates from the weakest area, from what was the strongest area, now weak area, into what is perhaps former weak area that could be at least short-term strong, so that they can have at least 6 weeks or 2 months of a trade at least. So the next question was SCHW. I always think of this as a bit of an indicator about the public. Yeah, very nice. So Schwab, Charles Schwab, very strong leg D in the weekly. I've got this as an F in the monthly, but I don't think that's correct. I think this is the start of a new move. I would not be surprised if I really should be putting an F/B. I'm going to do that right now. In the monthly chart of Schwab, up 1.13, up 2.23%. Yeah, this is very nice action. So the answer is, as long as you've got good strength in the public brokers like a Schwab, I'm convinced that 2018, even if we have a sharp pullback at some point, and I think it is coming, should be a good year at some point when everything comes back again. A question about Verizon. I'm going to go to Facebook. Verizon acting very well in a leg. Oh, 53.05, 1.21. Oh, man. Talk about a dividend stock. This is A, B. It's in a leg C. It should be going even higher over the shorter term. Very nice. And the weekly chart has really improved. This is leg C. Hey, it looks like the biotech. Look, A to B to C. Sharp pullback, almost like an arch, a cup formation. Holds and then breaks in one leg to the D. And this D is really more a breakout than a final leg D. This is a very positive D. It helps the weekly chart as well. Weekly chart has got the pattern that we talk about. The trend line lows, look, the trend line highs right there. Chapman wave falling axe formation right there. Broke out, and here's the lower lows. And now it's making that cup formation. Hey, I like Verizon. Very nice. Even as I'm about to change one of my subscriptions with Verizon. All right. Now what we're looking at is Facebook. In the den question on Facebook, S&P wants to see it. Facebook, you see, this is my quandary right now. I needed to see over the last week, we started to see it. This week is a bit of a follow through, but it's from Wednesday on after the Fed says what they say, does what they have to does, and we'll see what happens. But as I'm looking at it, it says to me that the FANG stocks, not all of them, but most of the FANG stocks like Apple we just saw and Facebook, I think they're in a digestive phase. This is not their moment. It should be for Apple, but it's not. There's no reason why it should. What season's greetings from Facebook? I don't think that they're going to have that kind of impact. If they move higher, it's just because the stock itself has generated a new signal, but I don't have any daily signals other than to say good chance there's an arch formation, and the most recent high of 184.25. I think that that's going to be quite significant. 182.45. Yeah, I'll be watching that closely. I think it's going to be tough to break. You might touch it, but I don't think this is a new breakout for Facebook. It needs time. And if you look at Google, G-O-G, still having a tough time calling it Alphabet, although a lot of people gave me great reasons for calling it Alphabet. I'm a little slow. So this is leg C in the weekly chart. That's good. And leg E in the monthly. So Alphabet, social media, C stock, holding very nicely, but until it breaks and holds decisively above the last high. Yeah, so I've got that as an F. Then this could be an A, B, C, and a D. Let's just do that. I meant to update it before. And it had the rectangle formation we spent time on over the on Friday, looking at this rectangle formation. And my theory was that you can't go wrong grabbing the outer little water. You cannot go wrong grabbing the outer bars of a wick like this and saying, okay, let's see what happens, because this could be the containment area for quite some time to come. And that says that the high with the spike high, gap up spike high that was made on the 27th of October at 1048.39, and the low that was made that day and the next day around about 1007. That's your parameter. So you've gone a little above it to PT. Now you've pulled back. And now I wouldn't be surprised if you form some kind of an arch formation here. It's not negative, I'm just saying. Could be in a trading band. So don't be frustrated if it goes up and down within this band for the entire rest of the month. Okay, so that's Google. Another one I want you to look at is Netflix. Netflix trading right now. See, now Netflix is a little different thing. I'm surprised that it's pulling back. Not surprised that it made a PG high and G all-time high, and then it kept going lower lows and lower highs, lower lows and lower highs, lower lows and again lower highs. I would have said, with gift vouchers and all that to Netflix and all, surely this should be a good season. That's maybe a good thing but there's just too much competition now. out of all these different other products. So I'm watching Netflix. So this is what I wanted to say, that there's a rotation going on. The rotation has gone, at least shorter term, although it's a little toppy right now, as I said to subscribers, into the SLX, which is the steels. They've had a fantastic run, just a little bit toppy on a daily basis, but still doing fabulously. The IBB saw some buying, but it's having a tough time seeing follow-through buying after that PT, but it did rotate into it. I'll be back straight after this important.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, folks, we get wonderful callers, to TFNN. I get to my show certain callers that we always listen with great attention when they call. Let me just finish this chart. I had a question then about CF, which is CF Industries Holdings, a stock we had looked at a long time ago and kind of went off the list. Had a spectacular move. It's in leg E, very strong a daily chart. Leg F, that could even be an alternate count in the weekly, but my eye says that there's a good chance it's going to actually make an F, and then maybe a G, and then a pullback from the 40, whatever it is, 40-somethings, back and retest the 37, 36 area, and the weekly chart's really strong in leg B. But I wanted to go to a stock, VRX, Valiant. And George from New York had called in quite some time ago. We spent a little time on it. He was looking at it, and then he said, I think that they've done everything they need to do. They've started to whittle away at all their excess product, the excess that they have in their portfolio in terms of what they are working on, what they can get rid of, and they have gotten rid of a lot. And I think he said that this is going. Look, now it's the first time that I really feel strong about it. Buying it, we bought it. I think he bought it actually in the 12s. It went just a little lower. Then it spiked up, gapped up on news of what they've been doing. Back on the 7th of November, spiked to 1362 and hasn't looked back. It's trading at 2166. Bravo, George. I had it on my list, and it kept on popping and then going sideways, and then it would pop and go sideways. And the last one, I thought, oh, leg C, and then forgot about it. And then I looked at just 2 days ago and said, oh my, look at that, spectacular. Look at the weekly chart, leg C. Monthly chart's horrible, but making a U-shaped pattern, very positive, starting to be positive. So you're going to be getting Steve Rhodes coming up. Then you've got Dave White. You've got Tom O'Brien. You've got, and yeah, just great programming coming up. Stay tuned. I just wanted to say that tomorrow I'll be doing my show. I need to just confirm it. I hope to do my show at 8 o'clock, 8 to 9 a.m. and have it recorded so that it comes on at this time. But it'll be a recorded show from early in the morning. I cannot, I have an obligation. I cannot change the time. So I won't be here at noon, but I will be doing the recorded show. So with that said, I covered a bunch of questions. And once again, George, congratulations. And as we go out, MOS was a question, and Mosaic is acting.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.